Old school trend trading techniques were magnificent. There are these wonderful techniques that have really been lost in the modern day because of really the advent of the computer, which is not a bad thing. But there are a number of these techniques that were devised by Schabacker and de Villiers, Edwards and McGee, Wyckoff, that we should have in our toolkit. So today, just so that we can continue to develop our skill sets, we're going to work on some trend technique using just vertical charts and classic stock charting technique. So with that, I'm Bruce Frazier. This is Power Charting. Welcome. We have a terrific case study that we started in the last episode looking at the S&P 500 intraday point figure. So let's keep going with that case study because it's not concluded yet. And then from there, we'll get into trend technique with the 50% rule and then apply those rules to some of the stay-at-home economy stocks. You will recall this point and figure chart from last time, 30-minute data, ATR scaling, one box reversal. There was a beautiful lift off the March lows and then a consolidation or a reaccumulation that begs to be counted. That count across gave us an objective 290904, 3,390. Dotted line is because we took the midpoint of this range because the count line is just one box off the low. So we're taking the count from the low and the midpoint. Now, this is the chart that I showed you last time, and we had not quite achieved our minimum objective at the time that we showed you this. We talked about volume. Volume has very beautiful characteristics in point and figure. And the neat part is that StockCharts.com allows us to put the volume on the bottom of the point and figure chart. Here you can see a huge liftoff, catapult wall, big volume. This is effort and result, effort in volume, result in price. And then from there, you can see a series of diminishing thrusts as the S&P pushes up. This is commonly associated with exhaustion of the trend. Each of these thrusts has volume, but the volume is generally diminishing. And here is a volume push to a two-box new high and on quite a bit of volume, and this is showing churn and effort without commensurate result. Then this rally here was attempting to go up and the volume was quite high. Well, let's look at what has happened. So here is these thrusts, and then this is the big volume push, goes to a up thrusting new high. Volume is quite high. Again, effort is marginally better, not great. And here you can see volume and one attempt to push higher and then a failure. This goes into, look, our 2909, 3003 went up to the area of 2950. So right into the middle of this count range, and then produced a significant weakness back into the trading structure. Now, what's notable about this is the expansion of volume to the downside, ease of movement with expanding volume. This shows the presence of supply. So before we had said that supply was not really present in any meaningful degree on the prior trading range area. But here volume is starting to show up again. And now we have volume on an attempt to rise, and it only goes to the midpoint of the range, gets up into this resistance zone. So this could be last point of supply area. Now, we're still open to the idea that this is reaccumulation, possible distribution. We want to develop our imagination about the possibilities of what could happen. If we get a turn down from here, low or high, we could get a move to a sign of weakness and then an attempt to rally. This could produce a bigger last point of supply here, and this would potentially produce a bigger distribution count. Now, if it stays in this area and becomes less volatile through here, that could be evidence, especially if the volume dries up, that could be evidence of absorption. And so at this point, we're seeing volatility generally increasing, not decreasing. We need to now start to see decreasing volatility that would tip off the notion of reaccumulation. Otherwise, we will be on our toes for this to be a cause built, and in the case of distribution for a down count or reaccumulation for an up count, and we know what we need to see from here for that to unfold. Now here's the Dow Industrials, similar time frame. This is going back into March, and again, this is a pretty orderly trading range with an up thrust, slight up thrust here, and then a big run up on volume that fails. It's come back into the trading range. This is not what we wanted to see. We want to see it jump out and then generally stay out, maybe flirt with the resistance line and then get going again. Well, it's attempted to rally here, but there's been additional weaknesses through the 5th, and on the 6th there was additional weakness back into this 23,650 area, which is right here. So we are back into the trading range. Now, just to give you an idea of the size of the count, this is a segment. This segment is 19 columns, 3-box reversal, gives us a count generation of 3,211 points, let's call it, which takes us down to here above the March low. This is a first segment count. Now, we made the case for what would need to happen to show us that reaccumulation is forming, and that would be some kind of a diminishment of volatility. And we will be on the lookout for that. And it's a little too early really to count this, because there could be either of these sets of gyrations, but we know that a count is forming and it's meaningful. So let's keep an eye on this, and also we can see a lot of volume here, which, look at the volume as supply came in and pushed it back down, and then volume as it pushed back to the resistance area. A lot of volume, it's not to new highs yet, and that's a bit of a warning. Okay, let's move on. Got a lot to do. Beyond Meat is our first stay-at-home stock of the day, which is also going to be our case study for technique for trend determination. And we really want to focus on technique for trend trading. This Beyond Meat, it goes back to when it came public. I like to use the term IPO disease, and I believe that this is what we have here with Beyond Meat. Is it went up to this 240 area and all the way back down to 50. Ouch. Big decline. This is not uncommon in IPOs, is to see this kind of dip after initial listing, and certainly the case here. What we have in, now this is weekly, is we have an attempt now to get above the relative strength, above its moving average. There could be evidence of leadership here. So Beyond Meat is starting to show some interesting signs and volumes coming in with ease of movement higher. what we want to do is focus on the concept of the 50% rule. There's really three elements to this that we want to develop in our skill sets. And a fourth I'm going to add is relative strength, is that we want to look for thrusts. And these thrusts are ease of movements higher. And this is an example of a thrust right here. Here is a great example of a thrust. And with this, you have leaping bars, ease of movement, higher prices, good volatility in an upward direction, and volume is generally expanding. We do not need high volume. High volume tends to produce climactic behavior. And we can see a volume spike here on a minor scale and a climactic surge. Here we can see a climactic surge. And this tells us that the instrument we're studying needs a rest soon, shortly. And the next thing we want to do is focus on trend lines. So in the case here, you can see that we've drawn a trend line off of this important reaction and off of this reaction, and this gives us a stride. So the stride of the advance is what we're really interested in trading. We're going to have reactions. These instruments are going to produce reactions on the way up. So let's blow this up so that you can see that there, after the climax, there's a reaction. This reaction is a 50% retracement of this move up. 50% retracement is these great market operators and chartists of many, many years ago, is they didn't have moving averages, they didn't have rate of change or relative strength or RSI to plot on their charts. They basically plotted price and volume, and they either did it with vertical charts like this, or they did it with point and figure charts. So they looked at the extent of a move, and then they marked the 50% retracement. They would put a trend line on it, and they would watch for the pullback to the trend line, maybe slightly through the trend line, and also the halfway point. So this is like 2 steps forward, 1 step back. It's stair steps. Now, what these traders were doing was identifying and codifying rules for how to participate in rip-roaring good uptrends that were just emerging off of important lows. We can see that happening here. This suggests that there's another one coming. And so the 50% place is a place to look to put on trades and also set stops below that trading level. If it coincides with a rising trend line, so much the better. And there are a couple of different ways this can come. But here we have a pullback in Beyond Meat, and look at the relative strength. I want to add this to it because this tells us that we have leadership brewing in this instrument. And leadership is what traders are looking for, and institutional investors also. So you can see that off of this 50% touch, there's a really vibrant turn and a push up with the gap that is taking it up to these prior peaks. And so there may be some work absorbing the supply overhead, but this is a stock that is acting as though it wants to reassert its leadership. Okay, here's another one. This is Peloton. And again, we're going to work on the 50% rule. You can see we can draw a trend line here on this low. We can draw a trend, touch it on this low, and this gives us a stride. Now, this is a really interesting example because we can see the climactic surge that comes at the end of this upward move, ease of movement, good leaping bars, volumes expanding, climactic at the end. It pulls back. Well, look what happens. This is a really interesting pullback. Here's the 50% level. I drew it all the way across. There's the first touch here, and then there's a series of tests. So there's volatility, but there's no longer price movement in the declining direction. It's volatile without going down any longer, which shows that supply may be exhausted in this uptrend. We can see the upward stride of the relative strength, shows leadership, pulls back to the 50% level, bounces across here. Good place to look to put a position on with the expectation that the upward trend is going to continue to assert itself going forward. Sometimes these upward trends, they go, here's a climax, it pauses, and then it breaks down. But we can see that there's the inability to be able to make new highs, and it starts to show a labored condition. Tutorial, 50% rule. So we can see how we're looking for the halfway point of a move up. This is a trend technique. It's old school. We're looking at stair steps, 2 steps up, 1 step back, etc. Volume confirms the trend, and then relative strength confirms leadership. Okay, another example is Roku. So in the case of Roku, you can see here that there's a climactic decline, long-term downtrending relative strength characteristic. Then a low is made and it reverses off of that dramatically. And so this is from 60 to 100. Wow, that's a big move. So let's look at the extent of this rally here. Let me blow this up so that we can see it easier. And so this rally here up, oh, and we can use the StockCharts.com Fibonacci Retracement tool. It works really well for this. We're primarily only interested in the 50% level, but nonetheless, it's a really quick and easy tool to use. And we can also see when a trend tends to be less than that, which is an internally strong characteristic. So here we can see 100% move up, here's 50% back, beautiful. We draw our trend line on these 2 lows, here's our stride. This is a potential place to enter a trade on a pullback or the first turn off that. Look at that beautiful bar right there. Now we have another uptrend in place with a climactic surge at the end. We measure this movement on its own, looking for the 50% retracement. And we have the trend line. It comes back, pulls back to the trend line. You can see that there's a really halting nature to the decline. It's having trouble turning back down, which shows that supply is not present. And before it gets to 50%, it turns back up again, and it's trying to get back up towards the highs. Maybe an attempt to test back down here at this 50% level, but that is to be seen. But nice pivot here, beautiful big bar starting to work its way back up, and we have this really vibrant uptrend. And these are the things, these uptrends are what we want to participate in. This is our purpose in life, is to identify, get on, and trade these uptrends. That's what Wyckoff is all about. Okay, with that, I'm going to stop for a minute and we are going to shift gears. Hormel, pork producer. We know that these meat packing plants having a difficult time right now. You can see the uptrend, this big spike of an uptrend in the relative strength. At the same time that Hormel is pushing up 2 new highs, reaccumulation range being taken out, it's backing up gently, volume is generally drying up. Also, there's a much bigger base reaccumulation structure from 2016 onward that precedes this area here. So this, and Relative strength is out of favor. Now it's basing, it's moving back into favor. This is a really interesting setup. Let's look at the near-term trend movement. Okay. Hormel is a very interesting place on the daily vertical bar chart. Here is the low of this run up. You can see a very vibrant advance. We put our Fibonacci retracement tool on here to identify the 50% retracement area. And here is the pullback right into the 50% area, where look at the inability to be able to follow through and go lower so far anyway. So you can see diminishment of volatility, narrow ranges, tight closes as it consolidates this first decline to the 50% level. This would be a classic place to turn back up and attempt another uptrending move, especially now that it's out of this reaccumulation area. So let's keep an eye on this as a 50% rule case study. Note this grueling decline in John B. Sanfilippo into a climactic decline in late February, and then testing that in March, which is, I think, bullish compared to the market at that point. Now, look at the rally that occurs off the test. So here is a vibrant upward move, and let's just take the 50% level of that, which is right into this zone here. There is a big tail that goes right down to that 78 level, which is at the 50% zone, and then a really sharp turn off of that. So this appears to be setting up for another attempt at a good dynamic rally. This is what we're attempting to quantify and participate in. So let's keep an eye on JBSS. And then next, Johnson & Johnson. Look at this reaccumulation trading range, goes all the way back to the beginning of 2018. Beautiful liftoff here, up and out of the trading range area, reaccumulation range. And so this appeared, in the relative strength is really good. So let's keep an eye on this one. And you can see here that, and I'm going to leave this for you to do, is to do the 50% of this area and see how far it could pull back. It's back to the 20-day. And let's see if it can hold here and then reassert itself into a new uptrend. Kellogg, big reaccumulation area here, starting back in 2017. It's attempting to potentially complete that. This is a really nice lift off of a higher low. Relative strength is now in gear, something that generally was not in place back to 2016. Now Kellogg has a characteristic of leadership. So here is the 50% rule applied to this nice uptrend starting in March. It lifted off from here because the whole area appears to be quite an attractive liftoff. Let's just do the 50% calculation, which goes back into the $60 level. And so far, it's attempting to test this zone, may not be able to get there. If it stays above 50%, that's inherently strong. So we'll keep a really close eye on Kellogg. Kraft Heinz. So here is a trend analysis, two trend lines that we've drawn. The steeper one is this really nice second phase advance from here upwards. 50% takes us back just above $27. So right now, $29.40 area. So if there is additional weakness back down to this larger trend line, that would put us right at the 50% level. So we'll keep a close eye on this, because what's interesting is this appears to be a test with a tail of this low. And if it stays above the 61% area, that could be a really inherently strong characteristic for Kraft Heinz, which has been really a relative strength laggard for a long period of time. And let's look at Malina. So Malina has a beautiful reaccumulation structure. It's launched its way out of that area after a test at the March low. The relative strength is beautiful leadership now, and the relative strength has also been in a reaccumulation structure. And look at this big base back here for Malina back in 2016 to 18. So a big foundation for this stock for higher prices. So this looks really interesting. Netflix, similar look to Malina, different, certainly a different industry. Reaccumulation across here, reaccumulation here, and then a jump up and out. Good movement. Volume expands as it goes through overhead resistance, and now it's just pausing after a really good advance. So let's see if this area from here to here is retraced by 50%. It would be really bullish if it stayed out of the reaccumulation area. Here's Nomad Foods, and here, beautiful launch off of a shakeout low. Relative strength is trying to turn bullish again. Look at how there was great leadership here, 2017 to 19, and now with this lift back up towards the resistance area, it may have to do some work. We'll look for a 50% retracement of this area or less, and see whether or not it can launch itself to a new high. And also this resistance over here in 2015 could turn out to be important as a resistance area. And this is Nintendo reaccumulation area. Relative strength has also been in a reaccumulation. Now there's leadership in Nintendo, and look at this beautiful launch. So this could be evidence that this is a new emerging theme, new leadership that could carry on for a while. So we're going to want to pay close attention to this, and could be potentially a very important trending stock. And then last for today is we'll look at Novo Nordisk, and we can see here a reaccumulation type structure at resistance. Relative strength is now rising after being in a base, and it's starting to turn up in a really meaningful way. This could be long-term leadership, and there's a beautiful lift off above the resistance zone. We'll look for a pullback of sorts, and see if the 50% rule comes into play here. Let you calculate that, and watch for a new uptrending character for Novo Nordisk. And with that, it was great to be here, and we will see you next time. And in the meantime, practice your 50% retracement with trend line analysis and thrusts. And see you then.